So today I'm taking a look at Dunelm Group. Dunelm Group's a store chain across the UK, specialising in home furnishings and accessories really for the home. So we've got furniture and beds, bedding, curtains, blinds, rugs, decor, including some wallpaper and things, lighting, kitchen and bathroom things for storage and some furniture as well, and some things for outdoors too. So it's quite a diverse range of product. Really aimed at the middle market. They've got some sort of cheaper things as well, some nice things too. So there's something really for everybody. Dunelm stores are really quite busy most of the time. If you get the car parks outside one of them, they tend to be out of town stores, or a reasonable size of unit. But they're usually fairly busy inside and taking the money. And they've also got a little cafe offering as well, offering some light snacks and tea and coffee, etc. So let's take a look at how they've been doing. So turnover versus the gross profit and net profit since Rainy Rona has been steadily back on the climb again and up to the nice high levels, way beyond the pre-Rainy Rona levels as well in terms of the turnover there. So it's all looking nice steady growth in this business. So it does make it quite attractive from an investing point of view. But assets versus liabilities, the debt liability there has been creeping up for the last couple of years, and they don't seem to be paying that one back down as yet. So I think, like many retailers, they had a bit of a tough time when the stores were closed, but now things are opened up again. They'll have that chance to start reducing that level of debt there. Capital expenditure has stayed pretty steady year on year, so that's absolutely fine. And free cash flow again looks pretty healthy. So we'll see the results of the year come out middle of the year. So we've got another 6 months of trading and see how things have been doing over that period. And obviously won't see the results until the summer of 2023 for the current year to see how that's gone. But look at the stores this time of year; they're actually taking quite fair amounts of money. So looking at the free cash flow model here for the DCF. Yahoo was saying that they're expecting a growth rate of like 1% per annum over the next 5 years. So there may not be any massive plans for expansion. So this may pretty well turn into a dividend stock. But in terms of its pricing at where we're at, my calculation is coming in at 17.17 a share, which is a pretty high level with the current price at 9.46. So if we have a look at Simply Wall Street's valuation, they've got that at 11.11. So it's sitting a little bit on the undervalued side from their point of view as well. So mine had that obviously quite heavily. So going over to SharePad and looking at the chart for the last 3 years, we saw a bit of a low at the peak of Rona cutting in, and then that fast rebound that everyone experienced. And it seems to be tracking along what the path of many retailers have been. They had a bit of a low down to October time, and they're having a bit of a bounce up for this time of year. But where that goes from here, we don't know. So if we get into January, things get a bit quieter. Things might head back downwards again. So we had a low with the onset of Rainy Rona there at just under £6 a share, and it got fairly close to that back in mid-October time. So that seems to be the sort of level you were looking at as maybe the low figure to be buying and investing back in. Whether it potentially goes lower, don't know, but it does seem a pretty stable business, and it's selling products that people will require all the time pretty much. So they should be pretty recession robust, I would have thought, as a business. Today's video is sponsored by Rule Number 1 by Phil Town. It's a lovely, easy read, and one of the first books I read getting involved in investing. It shows some lovely, easy ways to calculate the true value of a business and work out what sort of price you'd be looking at to buy a business when it's on sale is the ideal time. So you can click on the Amazon link in the description below, and for $8.99 you can get yourself some great easy reading as a good way to get started in investing. And clicking on the link also helps support the channel, of course. So if you like the videos, do like, comment and subscribe, and we'll catch up with you again soon.